Hello everyone and welcome to Crypto Red, the channel for all the latest crypto news. Today we're going to talk about Chainlink. We're going to cover the attack on Monero by Qubic, the 51% attack that, according to several sources, actually worked. I'll explain everything about that in just a moment. We also talk about Stripe launching its own blockchain, about also ETF, a French company, selling one of its subsidiaries to a Bitcoin mining company. We talk about Bitcoin and plenty other topics. Let's start with the crypto market. We have Bitcoin at almost $120,000, Ethereum at around $4,300. We're holding at very high levels here. And who's benefiting from this Ethereum rally? Well, Vitalik, of course, Ethereum's co-founder, who is now officially a non-chain billionaire thanks to his Ethereum holdings. He had already crossed the billionaire mark a few years ago, then dropped below it when Ethereum price fell. Now he's back above $1 billion. Over time, he has sold quite a bit of it, several tens of millions of dollars. So he has also other assets that are tracked on chain. Speaking of Ethereum, spot Ethereum's ETF have just seen record inflows over $1 billion in a single day. This is the first time that US spot Ethereum ETFs have crossed that threshold. That's a lot of money, a lot of investors buying ETH through ETFs and through treasury companies. I've talked about that before. Demand for Ethereum is strong and it's been a radical change. In just 3.5 months, we've seen a complete shift in the market. Now, I want to come back to Chainlink. They've just announced a major partnership with ICE, the parent company of the New York Stock Exchange. Chainlink will now integrate pricing data for various precious metals traded on ICE directly into its Chainlink data stream product, which I've already mentioned. This is essentially a real-time oracle that will provide these prices to decentralized finance in a very reliable way. They won't rely solely on ICE prices. Other providers will be included too, which will help further decentralize the data and ensure the most accurate possible pricing for metals like gold and silver. From what I read in the article, it seems more like likely that Chainlink is just paying ICE to get access to this data. I don't see exactly what ICE is getting out of it, other than having their prices integrated into the blockchain. But overall, it's a good move for Chainlink. Next, I want to talk about Monero, or the attack of Qubic on Monero. What's happening right now is honestly pretty crazy. I already made a long video about it, so feel free to go back and watch it on my channel. According to CFB, the founder of Qubic, they've now reached 51% of Monero's total hash rate, meaning they've achieved the majority of the network's computing power. He said, "I'm waiting for confirmation from independent parties who will come and verify this, but from the very beginning, Qubic's goal was to hit that 51% hash rate and possibly go even further to obtain the majority, maybe even all of Monero's hash rate, because it's possible when you reach a certain threshold to block other miners." That's not what they've done here. What they seem to have done is temporarily push their share to 51% to prove they're capable of it, but they haven't sustained it over time. This claim has been picked up by several well-known figures in crypto. Charles Guillemet, the CTO of Ledger, said that Monero has likely suffered a 51% attack. Peter Todd, a well-known Bitcoin developer, has also confirmed it. Arthur Brightman, the founder of Tezos, also confirmed it. The founder of Slowmist, a major crypto auditing company, confirmed it as well. So what can a 51% attack do exactly? It can cause major blockchain reorganization, essentially rolling back previous confirmed blocks. Right now, there have been rollbacks of around 6 blocks, but it could go higher. It also enables double spend attack, sending Monero to one recipient, then 2 or 3 blocks later sending those same coins to someone else. That means the original recipient could lose their funds. It can also lead to censorship and other dangerous behavior. From what's being said, there's no immediate risk to Monero's transaction privacy, but this is still a serious threat for censorship, for decentralization, and for the blockchain security in general. Monero supporters are pushing back, saying Qubic never actually hit 51%, claiming they only reached about 30%. But honestly, whether it's 30 or 51%, the fact is that they've shown it's technically possible to reach a huge percentage of the hash rate. This shows the limit of smaller proof of work cryptocurrency, which can be vulnerable to this type of attacks. We have seen smaller coins suffer from this before, but I think this is the first time, at least to my knowledge, that a crypto worth over $5 billion has been attacked this way. That's why this is so alarming. And frankly, I don't know what Monero can do here. There aren't that many solutions. It's an economic attack on Monero's, and Monero's coordination is pretty complex. They don't have something like the Ethereum Foundation with multiple independent development teams, nor do they have an on-chain governance like Tezos. So pretty complicated. As for Qubic, CFB is clearly isn't planning to stop. For him, this is a way to demonstrate Qubic's power as a computing strength of their network. Monero miners are incentivized to mine on Qubic's pool because they make more money. They get paid in Qubic tokens, and the Monero they mine is partly sold to buy Qubic, which boosts Qubic's price and increases miner revenue. This is an economic war between Qubic and Monero, and for now, Qubic seems to be winning. Monero's price is down 9% today. Qubic is slightly up today, around 0.8%. And look at the size difference. Qubic's market cap is $284 million, while Monero is at $4.5 billion. My personal opinion is that proof-of-work cryptos are going to struggle more and more because this type of attacks could become more and more common. Bitcoin is safe for now. The sheer size of its network and the billions needed to pull off such an attack make it nearly impossible. But all other proof-of-work cryptos, in my view, are potentially vulnerable. Dogecoin hasn't been attacked this way yet, but Monero also could be attacked. Dogecoin also could be attacked. On the other hand, proof of stake has shown its robustness. Look at Ethereum, a $500 billion market cap, functioning securely with over $100 billion in each stake securing the network. Attacking Ethereum in this way would require putting more than $100 billion at stake, which is simply not feasible for most attackers. Now, moving on to Stripe. The payment giant is reportedly preparing to launch its own blockchain in partnership with Paradigm, one of the biggest crypto investment funds. The blockchain would be called Tempo. It won't be a layer 2, it would be a standalone layer 1 blockchain focused on payments. We're seeing more and more payment-focused blockchain and more big names from Wall Street and Silicon Valley getting involved. Personally, I would have liked to see Stripe launch on an existing public blockchain on Solana, Ethereum, Arbitrum, similar to what Robinhood did, but instead they've chosen to build their own. But Robinhood also is planning to launch its own layer 2. Still, I think it will end up, the Tempo blockchain will end up being a public blockchain, so I hope it will be. It won't be their own private blockchain. I think it will be open to other entities as well, and that's a good thing. It's great to see blockchain adoption grow step by step. People are starting to understand the value of cryptocurrencies, and that's a very positive sign. Now, let's talk about Bitcoin. The Bitcoin miner Mara has just taken a majority stake in ETFs, a French company, a French energy company. The subsidiary name is Exillon. Exillon focused on cryptocurrency and AI with high power data centers. I know they were involved in staking for different cryptocurrencies, but they have always refused to mine Bitcoin, mainly for environmental reasons. So it's pretty funny to see them being acquired by a Bitcoin miner. Mara bought 64% of Exillon and has an option to increase that to 75% in 2027. This gives Mara more computing power, but also more expertise in other cryptocurrencies. So yeah, it's pretty good for this company. Next, Bonk. Bonk, the meme coin. Well, there's another treasury company named Safety Shot who announced that it planned to buy a lot of Bonk token, targeting $100 million worth of this Solana meme coin. The company Safety Shot stock fell 50% after they said that they'd be acquiring to start $25 million worth of Bonk. The market see this as very risky, and honestly, I agree. You can't just have 15,000 different companies suddenly pop up each announcing they're going to buy a different cryptocurrency. It doesn't make any sense. Many of these players are simply trying to pump their company's share price in the short term, selling the idea to shareholders without even necessarily buying the crypto. They just make the announcements, create volatility, and move on. Another company, FG Nexus, announced it wants to buy $200 million worth of Ethereum. Honestly, no, they bought 47,000 ETH, so it's pretty good. But they've announced targeting 10% of all staked ETH, and that's not realistic. They can't buy 10% of all Ethereum. For reference, Bitmine, the largest treasury companies, targets 5% of all Ethereum. So I don't believe this smaller company is going to reach this and double the target of Bitmine. Then there's Pump.Fun. Its token has been climbing again. If you look at this chart, it shows the market share of meme coin launchpads. Pump.Fun has been dominant for a long time until Let's Bonk came along in July and grabbed a huge share of the market. But just as quick as Let's Bonk appeared, it's almost gone now. And Pump.Fun is back to dominating meme coin tokens. That helped push the token's price up, and it really highlights the volatility of this space. Honestly, I'm still trying to figure out if anyone here specializes in Solana meme coin ecosystem. I'd love to hear your thoughts on how Let's Bonk could rise so quickly and then fade away just as fast. And finally, another platform worth mentioning, not exactly a meme coin launchpad, but a social platform that lets you launch tokens, is Zora. On Zora, every post you make can be turned into a token. Their token has been performing really well with a 43% jump on one day. Why? Well, because a lot of things are happening in Base. A lot of meme coins. We're talking about a lot of community, a lot of momentum around meme coins and all around Base. So Zora is profiting from this, and a lot of tokens are launched on Zora. So this also gives content creator on Zora a new way to monetize their work. I think we'll see a wave of speculation around this, which will eventually die down, leading to more sustainable model. Then we'll see whether creators can genuinely make money through blockchain with a product like this. That's it for today's crypto news. I hope you enjoyed. If you did, don't forget to like, comment, and subscribe, and see you tomorrow for more. Bye-bye.